So when I first started getting into trading around about 7 years ago, I thought I found the holy grail. Everybody was speaking about support and resistances. Now, for me, 7 years ago, when I first started, support and resistances seemed to be the most logical way to trade. Everybody was trading that way. Did not work out for me. Went on the sidelines. And then 4 years ago, when I decided to give this full-time gig of trading, supports and resistances naturally draw me towards that again. Now, the only problem with supports and resistances is it's not what you think it is when you first start to trade. And it's not that supports and resistances do not work. They do massively, and you can see in the way that I trade, but there are so many different elements that you need to be looking at when you're looking at supports and resistances. Now, as you know, when you first get in, you think you found that major strategy, and you think this is the one that's going to make me millions and millions of millions. I actually did a last video of what people are missing out, which is actually stopping them from making millions in trading. And some people commented because they don't think you can make millions in trading. And that tends to be the case if you're in the wrong environment. That tends to be the case if you're following these Forex signals, etc. But if you're in the right environment and you're around the right traders, you will know that some people make $1 million per year, if not more, trading energy, commodities, etc., or even futures or options. There are many across the board. And I, for one, personally know many traders that are in multiple millions for the year when it comes to trading. And the reason that people have this doubt is because of so many things on the internet, etc. And also when they try a simple strategy like support and resistances that I'm going to show you now, is they just try to buy at supports and sell at resistances with no mechanical edge. So for me, it took me a while, and initially it was divergences. I found divergences when I was trading crypto to have a look at bullish or bearish divergences to get into the trade, but that still was not enough to get me consistent. Then when I went over to futures at the beginning of this year, I started to have a look at different types of ways where I can get into the market with more confluences. And I'm going to show you in this video, so make sure you hold tight, of what I do on a daily basis with my community and teach people how they can get in and out of trades and obviously be sustainable, not just looking and praying when they get to support or resistances. So let's jump over to the charts and I'll briefly show you exactly what I mean. So as you can see here, we've just got these levels. These gray zones are the levels that I would mark on my charts at the beginning of the trading week with the community. And then I would come and look at these throughout the day just to see where we are at. And this is on a higher term time frame and do your top down analysis. Now, if you have a look at the gray zones, it's very, very simple of, oh, well, it's very, very easy for me to say, well, this looks easy. I'm just going to sell at resistances, buy at support. Buy at support, sell at resistances, buy at support. You know, you get what I mean. And this is what you probably do when you first get into trading and you say, this looks so easy that I'm just going to trade break and retests or buy supports and sell resistances. But what we do know later on down the line, probably very, very quickly, that the market does not work like that. It is built by the biggest and the most intelligent mathematicians, scientists on the planet. So what makes us think that we can just come in and just say, oh, well, I just click a few buttons and I might get lucky a few times. I might be able to flip this. I might be able to flip that. But sustainability for you to be able to live off trading, which I do and people in our community are starting to, you're going to have some sort of edge in the market. And the edge is, what is your entry criteria? Now, there are many, many ways to get into trades. There are hundreds of strategies. There are hundreds of course names, etc. But ultimately, they all boil down to the same thing: human psychology. And that means that you need to have the confidence and the edge to get into the market. So what I want to show you is something very, very simple that I use on a mechanical basis. It really, really helps me with my emotions. And for a trader, if you can be aware and have some sort of control over your emotions, you're going to be able to remain calm before, during, and after you take these trades. Now, at the beginning, that's going to be very, very hard for you because you're going to have emotions that are going to trigger. But what I want to show you is, let me go over to another term time frame and to show you what I mean by getting into a possible trade setup. Now, this is the 4-hour term time frame. And what I'm going to do, let's get rid of that over there. What I'm going to do is I'm just going to mark a simple resistance SR flip support and resistance zone. So if I go over here and say that we look to mark out this zone just here, you can clearly see on the 4-hour term time frame that this was resistance, and then it flipped and became support. That is an SR flip. But what we're going to do, we're going to go down to the time frame that I like to use, which is the 5-minute term time frame, and we're going to zoom in and see if we could possibly get into an entry using our criteria. Now, as you can see on the 5-minute term time frame, you have plenty of opportunities to start to look for trade setups. Now that we are back down at this zone with a nice big sell-off, this is what I like to look for when I'm looking for a trade. I like to look for a 3-candle reversal formation. Now, there are many different names for this. In ICT, I believe they call it candle range theory. There's many people just make up names for whatever they want to. You can either use a 3-candle reversal, you can use it in a 6-candle, 4-candle, whatever it may be. But what I look for preferably is a 3rd candle to show me the shift in the market, or a 4th candle, or a 5th candle, or a 6th candle. I'm going to look for 3 and 4 candle splits shift for you to see this now. So once we come down to this zone, this is our major zone. Remember what we were speaking about. We was interested in our major zone. And what I'm going to do is I'm just going to do that so you can see just here. Now, if I'm looking for my 3-candle formation, and let's get, something like this, and let's just highlight that so you can see what I mean by an area, what you need to be looked for, and we'll just highlight that so you can see. This is on the 5-minute term time frame, but remember what I did. I went up to the higher term time frame to find a level of interest, and I must wait patiently for that to happen. Now, as you can see just here, we have this first red candle on your chart that moves to the downside. Let me see if we can just highlight that again. This candle just here, that gives me a liquidity sweep into that zone. So what I'm looking for is I want the 3rd or the 4th or the 5th candle to close above that candle high. Then I'm interested in the market. Now for me, this is on the 5th candle, which is that candle right here. I'm not really interested in that one. So I will wait for the next zone or the next tap into that zone to give me that what I'm looking for. As you can see just here, I get a perfect 4-candle, 3-candle reversal pattern just in this zone just here. You can see that they're consolidating. We then get a shift candle that engulfs 3 or 4 small bearish candles. That highlights to me that the buyers are interested in this market at a very important level. 1984 on the NQ this was. Now, there are 2 options. You could go in straight away on the 1st candle. But if you've been trading a long time, you will realize and you will understand that normally when we have the 1st candle, a lot of the time we will have a stop hunt or we'll have a slight pullback into a range to then move to the market. What I like is for the market to come back into some sort of zone for me to get into a trade. So what I'm looking for is once I get my pattern, I'm looking for maybe a retest into here, and then I'm looking for 2-to-1s, 3-to-1s, 4-to-1s, predominantly 2-to-1s, moving stop loss to entry. So let's have a look what actually happens when we get that trade. And let's go and press the replay. So there you go. We get a move straight back into the zone that I was talking about. What happens then is I'm looking for a long position in here. I'm going to put my stops below and I'm looking for that zone. Now this goes on to give me a free R. My first TP would be the range high at 2.5, and then we'll let the play go on as well. Now this trade continues to do its thing, and you can take trades, you can hold trades, and then eventually it will just hover around this level and then continue to the upside. Now we're not interested in any other trade after this because we don't come back down to this zone again. If we do come back down to this zone, then we would look for the same sort of pattern again. Now let me just stop that right there. And you can see that we then get a 2-candle formation on the 5-minute just here. And let me highlight this right here again. two candle formation, but not a 3. So I would like to wait and see what happens in and around that. We continue to the upside and we keep going. Now, that is a 2 candle formation. I don't like that. So that is something that I would not be interested in. Now, if you look closely of what I actually did was I waited for my 3 candle formation to move to the upside. Then I knew that buyers were interested in the market. Then what I waited for was a retest of some sort of zone. 50% of the candle would be nice, but what you will see if I zoom right in, a lot of the time you will see these wicks here and these wicks here. We could pierce that zone and then move to the upside. That's exactly what I'm looking for. Let's have a look to see if we can find a short on this. Let's flatten that and let's see if we can find a short. This is off the cuff. This is not pre-planned in the actual price action. People say, well, let me find a trade and let it play out perfectly. This is just literally off the cuff. I'm trying to find an entry for you of what I mean by looking at 3 candle reversals and then we move to the upside with a retest. Let's have a look right here. We had this stand to the downside. We had this here, what we spoke about. I'm trying to find one to the downside so you can see exactly what I mean, where I get the perfect retest, which would be perfect. Let's have a look that we've got one here. Yesterday's point of control going in just here. Right, so what we've got just here now, as you can see on the higher term time frame, this is a level of interest right here. A big zone of interest. So what are we looking for? We're looking to see if we can get some sort of reaction once we start to get into the Asia session overnight here. I don't trade Asia, but it's very, very good for a lot of people. Do we get a 3 candle reversal within this zone at yesterday's highs, price action, New York highs, for us to get into a possible trade? So let's zoom in and see what we can find. As you can see, it's a little bit messy around here. We don't have a close here. We don't have a close here. But then what we do get is we get a close just here on a 3 candle reversal. Just there. That is a 3 candle reversal pattern. Liquidity grab, come to the downside. Next candle closes below the first candle. Now we're looking for what? We're looking for a retest into a zone. And that's the retest into our zone just there. Let's move this. Is this going to allow us to do that? Yeah, there we go. Into there, that's where we're looking for a retest. What do we then look for? We then look for a short position in here, anywhere in this zone. We then move out. We want our stops just above our zone for there, and we're looking for that too. And this one actually plays out to be a monster trade on the day that I am obviously making this video. I mean, if you stayed in this, it's absolutely crazy. Well, this was the day before, and it continues down and down and down and down and down. Now, what you would like, you want to go for your 2 to 3 to 1, and there you go. You've got another opportunity. So let me just highlight this on some illustration on the charts and get rid of this and get me some in here. This will work right here. So what do I mean? It's very, very simple. This could be a support zone. And let's make that back to our trusted gray. And let's get rid of the red right here now. This could be our support zone just here. Major zone that we're waiting for. What we want to see is this pattern. We want to look at things like down, 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 down above this peak here, which would be the candle above, down, retest. That's what we are looking for when it comes to a long opportunity. It could be a little bit neater, but you get the drift. These are in candle forms. It would look very much like this in candle forms. Let's just get this. This would be your down candle just here. Then you'd get a candle here. Then you get a shift. Then you get a move. Then you get that. That would be how your candles would go for one of a better picture. Now let me then do the reverse for you, so then you can move to the downside. What you would look for from the downside, all you would do would inverse what I've just shown you. You would have price coming up on the time frame, on the lower term time frame, something like this. You would then have the spike. You would then have the first, the third candle that closes here. Then you'd have the retest. Then you would move to the downside. So how you would see this on a higher turn time frame with a break and structure or anything like that on, say, a 15-minute or a 30-minute or a 1 hour or a 4 hour, we look at this on the lower term time frame on the 5 minute, and then I look at the 100 tick chart, which I won't go over this over on Top Step X as well. I go over on that to obviously get into my futures trading setups. So that's how I get into supports and resistances, by giving me that slight edge. That allows me to do a 1, 2, 3 step process, wait for my level, wait for a 3 candle reversal, or 5 or 6, whatever you may be, wait for my retest. There's 3 major important rules that I must abide by for me to be even considering getting in a trade. If it's not at the major level, I'm not even looking for a 3 candle reversal. Now, you can implement these, you can add the 100 tick chart, you can add other ways of looking at the charts, but that is what works for me and the community. If you do want to get involved in any way trading whatsoever, there is a link below. You can book a free growth call with me. I only work with a very limited amount of people. And if you want to get involved in the futures trading, which is a game changer, then obviously you know I only work with one company only, which is by far the best, which is Top Step. Go and check them out by the link below as well. Even if you don't purchase any of your evaluations to make sure that you start earning that nice monthly wage, just by clicking that link through this channel, it highlights and notifies Top Step that you have come through my channel, and that allows me to continue to work with them as well. If you want to catch the way that I trade, go and check me out on Power Hour every Thursday, 8 p.m. UK time, for the Top Step Power Hour. Go and check them out on YouTube. Over 125,000 subscribers. Do all the jazz that you need to do on this, and I hope you found this video very informative, and I wish you success for your trading journey. You take care.